My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Let's be friends. I'm just trying to make you a little money. My job is not just to teach and educate, but also to entertain. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. The rebellion against the data center continues. That's the dominant theme of this market. Don't let anyone tell you otherwise. The data center has been the single biggest investment story for months on end. Even if it's not always obvious from the averages, say with the Dow advanced 160 points, the S&P declined 0.47%, and the NASDAQ, yes, tumbled 1.35%. This sea change, one that we are undergoing in real time, with the data center theme suddenly going from positive to negative, is buried within the broader indices, but it's like a living, breathing, seething animal. A snorting bull turned into a grizzly, scratching and clawing back the gains in your portfolio. How do I know this? Aren't there more cross currents than that? Oh, of course there are. I mean, there's the endless tariff drumbeat, one that's driven stocks lower en masse. Incredibly, aside from the Dow, there is no index, not the S&P 500, not the NASDAQ, not the transports, not the Russell 2000, that's up since Inauguration Day. And some of them, like the small cap Russell, getting killed. It feels like we get a new tariff every day, doesn't it? Today, we got a defense of our large cap tech companies, which have been endlessly targeted by our European allies. These countries, they've used our tech companies, Amazon's, Alphabet's, Apple's, like honeypots. Now, when it happens, our government will retaliate for a similar amount of money. No more plunder. I know these tariffs have people on edge. Consumer confidence indicators, they've just plummeted. Interest rates are sinking for fear of an economy gone soft. The key 10-year Treasury yield is back to where it was in mid-December, when many thought we were looking at many more rate cuts than we've gotten. We have had to put rate cuts talk on hold. Now it's right back because there's a newfound paralysis. Too many things happening at once, scaring people, few of them good. I know President Trump is deeply committed to tariffs as a way to bring back money and protect American industry, but Trump also judges his performance in part by looking at the averages. If this decline keeps gathering steam, we may have a presidential put, because I think he'll feel compelled to do something, anything, to turn the market around, but not yet. He's not going to come to the aid of a specific theme, like the wonderful rise and now hideous fall of the data center. First, some history. A little-known graphics company and gaming chip maker called Nvidia invents a semiconductor that both enables accelerated computing and generative artificial intelligence, the kind of AI that knows when you buy a book about the Battle of Khe Sanh in Vietnam, that shows you 4 other books you might want to buy about that terrible war, or when you ask Alexa for Tchaikovsky's second violin concerto, like I did last night. Oh, no, it actually put on a Prokofiev symphony instead. All right, no, bots are perfect. This semiconductor becomes the backbone of electric vehicles, of robots, and most important, of the data centers themselves. Consider them barns with brains, huge warehouses full of servers. No large tech company worth its salt can afford to do without these data centers. So they spend billions upon billions upon billions of dollars, and they are stocked to the rafters with Nvidia chips. And then out of nowhere, some Chinese outfit finds a way to do much more with fewer expensive chips, and the whole data center world is turned asunder. Some data center builders plant seeds of doubt about the need for all this hardware capacity from Nvidia. Suddenly, the data center feels fragile. The tech titans, Amazon, Alphabet, Meta, Oracle, Microsoft, throw in Tesla, have been dependent on this data center and the spend. A whole swath of industrials like Cummins for motors, backup, Constellation Energy, Vistra for nuclear power, Vertiv for the guts of the data center. They've all been trading together. They're linked, and they're hanging in the balance. We know that what's happening is we know what's happening. Why? Because every member of the Magnificent Seven, save one, Apple, are drooping, because they may have spent too much money on data centers. The fact that Apple hangs in there is actually proof positive the data center is what's on the line, because Apple's the only one that hasn't spent fortunes paying Nvidia for the lifeblood of the AI platform. They always figured they could just license from the technology for somebody else, given their massive user base. Yes, Apple didn't have to spend tens of billions of dollars in these warehouses full of servers, so its stock hangs in, irrespective of potential tariffs from Chinese components, which seem kind of, at least Taiwanese components, too. It seems like if the punitive government of China also goes after them, well, anyway, the President Trump has so far been okay. He has not hurt them. But then again, they did commit to a lot of money, didn't they? But let's go back to what's in balance, or I should say in the crosshairs It's not really Apple or Microsoft or Amazon or Alphabet or Meta or Tesla. It's the odd man out of the Magnificent Seven. It's Nvidia, the most important stock in this entire stock market. Nvidia. Nvidia holds the key to countless tech companies, not just those majors, but to Arista Networks, Marvell Technology, Cadence, Synopsys, so many others. Plus, Nvidia now might be hurt by the President of the United States who wants to tighten Chinese export controls further. The most exposed group might be semiconductor capital equipment players, with Nvidia being the most visible potential casualty. Some are going to so far as to say that Nvidia holds the key to the fortunes of big momentum stocks like Palantir, like Apple, and ServiceNow, and even Bitcoin. Can you imagine? And tomorrow evening, Nvidia reports. So right now, I think we have two markets. There's the market that's dependent on Nvidia and its fellow tech titans. And then there's everything else, the drug makers, retailers, consumer products companies, even the once-scorned food stocks and the bedraggled home builders. Now, you might want to take a page from Lincoln and say that a house divided cannot stand. That's why the selling in Nvidia world is so vicious. To the sellers, there can be only one victor, and they think it's not going to be the data centers. Not only that, but these sellers have equal scorn for the frothy momentum stocks. All of these ancillary data plays, like the fanciful nuclear companies that were supposed to win because the data centers are putting too much pressure on the power grid, or the quantum computing plays that are all about finding the post-Nvidia computing play, even if it takes 20 or 30 years. Not a great investing timeline. In the end, though, I don't think things are nearly as binary as it seems. The house is not divided against itself. 24 hours from now, we'll know if Nvidia is selling a lot of product, or if it can't, because you can't make it fast enough. We'll know if it's possible that it has more large customers than just the tech titans. So we can stop counting those dollars. We'll know if it can avoid making chips for China entirely, so that that's not a concern. Be taken off the table. We'll know these things to be self-evident, including all the orders. And then, after we know that, life will go on. Consider Nvidia's earnings to be what I call a clearing event. All of the Sturm and Drang will already be done, and the damage will be complete. Only then can we start thinking about tech and many of the industrials. Only then will the food stocks return to their lowly status, and the drug stocks be rocked with profit-taking. We'll be wondering why we paid so much, not for Amazon, but for Procter & Gamble. So here's the bottom line. There's no denying Nvidia's importance. Right now, it's paramount. But I absolutely deny that it can take down the rest of the tech edifice. Frankly, it's already happened. And I bet it won't happen twice. But if it does, let me tell you what to do. Bye. Mark in Pennsylvania. Mark.
Yes, Jim.
Mark, what's up?
How are you?
I'm doing okay. How about you, buddy?
I need your help.
I'm right there for you.
Let's talk Ford Automotive. Should I buy, sell, or hold? Because should I sell it all and buy Rivian or Tesla?
No, Rivian, no. My Tesla actually like down here because it's a tech company. Rivian, it needs capital. Ford, no, you don't want to own Ford. I feel terrible about saying that. I have a Ford, but it's not where you want to be. You got to be in a place where I feel confident that the earnings are going to go up or the sales are going up, and I don't feel that way with Ford. I'm sorry. I need to go to Bill in Massachusetts. Bill.
Jimbo, it's your friend from up north. How are you?
I haven't heard from you in a while, Bill. It's good that you're back. What's going on?
Hey, listen, I love your weekend post. It saved me Monday because I knew it was a false positive, so I sold 15% of my Nvidia, sold about 20% of my Vertiv, because I felt something coming on here.
I was burned out. I wrote that piece. I got up at 5 a.m. on Sunday to write, Saturday too. I was burned out, but I'm never going to let the club down. So I wrote the piece, and then I rewrote the piece, and I said, man, maybe I'm too negative. No, and then I just hit the button. I hit the button, and there it was. Anyway, that's the way that's how it works. So go ahead.
Jim, you're incredible. That really set me off thinking, and I love it because this is my 4th year as a club member, and I'm loving it.
Thank you.
What I'd like to ask you about is Uber. Do you think I should pick up a position in Uber?
I like Uber very much. Now, I was there when they reported, and it was incredible. The stock went down, and I called out the people who were selling it as morons. Now, look, I think it can, I mean, it's a 74. Could it go back to 68? Absolutely. So, Bill, here's what we're going to do. We'll buy a little bit tomorrow, and then if it goes to 68, we'll buy a little bit more, okay? That's the game plan. Thank you for saying that about the Sunday night piece. I pour my heart out there. I'm always thinking, has anybody read it besides my daughter? No. Regina Gilligan has said no. The only person who reads it is Bill and Cece. Oh, and Regina reads it. Oh, you can't beat that. I got 3 readers. Look, there's no denying Nvidia's importance to the market, but I find it hard to believe it can take down the rest of the tech because, like, tech's already been taken down a lot, and I am not betting on that happening again. But if it does, buy. Mad Money tonight. Robinhood fell alongside the market in last week's sell-off, despite ending 2024 as one of the tape's best performers. Do not miss my exclusive to hear more about the stock's road ahead. And speaking of fintech, can PayPal rebound off its post-earnings pullback? I'm going to check in with the CEO fresh off this company's Investor Day. And later, the only resource stock we own for the Travel Trust, Coterra, following yesterday's earnings beat. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.